Hi, it's Marcus here. Very exciting. I'm going to share some core information with you now about where is it safest to invest in the market. So you're going to probably need a piece of paper and a pen here because I'm going to be drawing my famous risk line all across there, where on the right hand side you're taking on more risk, on the left hand side you're taking on less risk, right? So I'm going to go through this quite quickly, so really try and follow me, and you might want to take some notes here as well. So for example, let's just say you are going to invest in an entire market like the S&P 500, it could be, the Dow Jones 30, or it could be, whatever it is, the FTSE 100. This will probably be in a basket of shares called an ETF, and I have another video on ETFs, exchange traded funds. Question is, what's the risk like here? Can this thing go to zero, for example? The risk, I think you'll agree here, is very, very low, isn't it? You're not going to get, the best companies in the world or in the UK or in Germany, whatever, going to zero. Risk is low, but therefore the volatility is so low. And therefore, quite frankly, the chances of you making money aren't that high. Whereas if you go on the right-hand side of the risk graph, you basically can have a company that has just done its IPO, initial public offering. Okay, it's just gone public. Private company, cut itself up into stocks and shares and goes onto the market. What do you think the risk is of this going to zero compared to this on the left-hand side? And I think you'd agree the risk is probably extremely high. It's the opposite to this side, isn't it? I've gone to the both extremes. The volatility is insane. It's insane. You could have a company go up by 100% the next day and then fall by 70% because the market is not quite sure. There's uncertainty on what should the price actually be right now. It's a new company, has to find its feet, and then it starts kind of stabilizing. But, it has to be said, some of our traders specialize on this. Keith, for example, loves to have a good old IPO, right? He'll use one of our strategies on that. Makes a lot of money. I remember one of our other traders, Yusuf, I remember him making 36% on his entire account in one day using these IPOs. Not for the faint-hearted, I have to say, not for a beginner. I think the question really was, where is the safest place to invest? Probably not here. Probably here, but you're not going to make any money. So safest place to park your money would be here. Safest place to invest your money to make returns, probably not here. So what are we saying? Well, the extremes are out right now. So I think you can see where this is going, right? But just in case, let me continue. Markets are also made up of sectors, right? They're also made up, if you cut them up even further, they're made up of different industries. Okay, so what we're talking about here is we're talking about an entire market, cut a piece out, and you have, let's say, the technology sector, okay? And that is made up of different industries. I'll give you a concrete example. So here you might have the finance sector, and here you might have the banking industry or the insurance industry that makes up the finance sector. And obviously there's different ones as well. And what you're going to find is that because it's a little bit, what do you think? Do you think that the risk is going to be a little bit more? Or do you think it's going to be even less than an entire market, or the entire market together? And the answer is, when you take a little bit out, the risk is going to move up a little bit. And if you take a little bit of this out, right, then it's going to move up even more. And this is what we're looking for. We're looking for this. We're kind of looking for this, the sweet spot here. We're looking for where the risk is okay, the volatility is okay, and your money making chances are okay. Can you see what happens? The more I'm on this side, there's too little. It's not even worth putting my money in. And then as I go in, it's just right. And over here, what happens? Starts heating up. What happens on the right-hand side? It's too much risk, too much volatility. Okay? Extremism is never good. Extremism is never good. Now on the right-hand side, we might have public companies, but you don't know what they're doing. Public companies, you have no idea what they're doing. They've been there for 5 years, 6 years, 7 years, but you have no idea what they do. What does this public company do? So the risk might not be as high as an IPO, but it's still pretty risky. What does it do? I don't know. Do you know anything about its management team? No, not a clue. Let's invest our money. I wouldn't do it. Okay, I wouldn't do it. Is it less volatility? It is less volatility than an IPO, etc. So can you see over here again? Over here, too much, still too much. It still hasn't come here. This is really, I would invest in entire industries. Yes, I would. I would invest in gold and silver. I prefer silver, quite frankly, because when gold goes up a little bit, silver tends to get up a lot more. And if gold goes down, silver goes down a lot more. So it's got that great volatility, but it's safe. It can't go to zero. That's what you want to be investing in. This, of course, are precious metals. You probably can think of some yourself. And the other thing is commodities, you know. So, for example, things like oil or copper, for example. Again, these things can't go to zero. It's really funny when people are saying, but oil did go to zero. Oil did not go to zero. The futures contracts went to zero. Oil did not go to zero. It actually has a worth. And we were investing in it all the way as it came down and rode it all the way back up again. Okay, gold, silver, and oil. That's the right risk, volatility, and money ratio. And I'm going to do this in blue chip stocks. I'm not talking about companies where you don't know what they're doing, but I'm talking about companies like Disney. I'm talking about Cisco, Intel, Walmart, Home Depot, Caterpillar, Coca-Cola, Procter & Gamble, Microsoft, Apple, Google, Facebook. You get the picture, right? You have probably heard of every single one of those companies. They're huge international companies, so they're not just in like a corner of some village. They're everywhere. And they have hundreds of different products just in case one of them doesn't work anymore. Those are blue chip stocks that you want to be investing in, obviously using a strategy with rules. Okay, so make sure you learn those rules, and then you can invest in, you know, blue chip stocks, commodities, precious metals, and in even entire industries. But personally, I avoid the ones on the left, on the right, because on the right, too much risk. On the left, not enough, therefore we won't make any money. I hope that makes sense. If you have any questions, please do ask me below. I'll be more than happy to answer your questions on this, because maybe that was a little bit of a more advanced topic, but it's so important that you understand, especially when you're starting out, where to safely invest your money with a strategy. You've got to add a strategy with rules. When to get in, when to get out, how much to invest, and where to invest. And that's this part here. So please do comment below, where do you invest? You know, what's the last thing you invested in? Did you invest in oil, and what happened? You know, did you invest in precious metals, or even an ETF of an entire industry? Okay, or blue chip stocks? Or do you do public companies or IPOs, or even entire markets or sectors? So just comment below. I'd be very, very happy to converse with you and answer any questions that you have. And as always, please make sure that you hit that subscribe button. Why? Because I'm going to be sending you so much of this kind of information over the next few weeks and months to make sure you profit from trading and investing, which is so simple to do. You just need to learn how to do it. So please do make sure that you hit that subscribe button so you don't miss out on this kind of information. And if you liked the video or just learned something, which I really hope that you did, here hopefully it was the best place is to invest in the sweet spot right in the middle, then do hit that like button. I'd be very, very grateful if you did that. Thank you so much, and I look forward to seeing you on the next video.